In the urban centers, the really high quality real estate, for the most part, is financed with CMBS debt. We looked at the recent trends going back to the beginning of 2021 for all new CMBS debt that was placed. And again, this is primarily with high quality assets, generally in urban areas, but not exclusively. Since the beginning of 2021, the new debt that's been placed using the CMBS financing has been 70% floating. Why is this? Because the hedging costs are up over 900% since 2020. So investors cannot afford to fix their interest rates on CMBS products. They cannot hedge the fees, the rates. They've let their rates float. And you've seen what the Fed's done with the rate increases. It's been terrifying, especially for those investors who are on these floating rate loans. We see overwhelming opportunity in Q4 of 2022 and Q1 of 2023 with a ton of investments that are not going to make sense anymore because their DSCR, which is debt service coverage ratios, tend to might not make sense, and they will invert, meaning the debt service will exceed the free cash flow off those properties in a large percentage of those CMBS backed buildings in Q4 and Q1 of 2023. This tells us there's significant opportunities for smart, savvy investors to be able to acquire generational assets within the urban centers of the fastest growing major US cities. Cities like Austin and Dallas and Houston and Phoenix and Miami. The Sun Belt is strong, it's growing, and there's a limited opportunity to be able to acquire first in class, best in class, generational assets at the best locations. Think about New York in the early 1980s. Think about the turnaround of the crime that happened there, that everyone in real estate in Manhattan in the 1980s who doubled down on real estate, knowing that it was purely a political problem, look what happened to their balance sheets if they held until the mid 1990s and early 2000s. They did exceptionally well. That opportunity may be present for savvy real estate investors who see that the debt that's floating presents opportunities. And the people that are going to see the most opportunities are the ones that are hybrid operators like Strategic, who have a sister company that does third-party brokerage advisory services and is able to see off-market deal flow before it hits the market. If a property hits the market, it will trade at a par price. Before the property hits the market, there's an opportunity for an outlier, for outperformance, to be able to buy a mismarketed asset. So pairing those two things together, upcoming misaligned listings, misaligned real estate, mismarketed real estate, and a floating rate catastrophe for CMBS borrowers, we see significant opportunity coming into 2023 and potentially into 2024, for which LP investors and smart general partners can certainly take advantage.